All right, good morning, guys. Today we're going to be doing a review of today's trade. Okay, so we're going to be looking at gold. We're going to be looking at gold, and okay, this is obviously the 15-minute chart. As I've been telling you guys, when you're trading New York session, you don't really need to, sometimes you don't need the daily chart, the weekly chart. You can just work off of the 15-minute chart, the 5-minute chart, and the 1-minute chart. So that's exactly what I'm going to be showing you today. Okay, so this is obviously Monday, the 23rd of June, and we obviously had rumors that the US has bombed Iran. Um, sorry, US has bombed Iran, so obviously we saw a gap opening. So it's a new week opening gap since it's a Monday. We have that, so that's the opening right there, and that was the closing price on Friday, right? So that's a new week opening gap on 1 minute. You note the opening price, excuse me, at 6 o'clock on Sunday, New York time. Make sure that you're always operating on New York time, and then the closing price on 1 minute. The difference, that is obviously your new week opening cap if it's a Monday. The same thing, you do the same thing again for Tuesday, Wednesday, but then that will be a new day opening gap because it's not a new week starting. Okay, so you just gotta bear with me here. My voice is a little bit, because of the flu that I have. So yeah, let's look at what we have here on the 15-minute chart. Obviously, if you look here, we saw relatively equal lows cleared, bullish market structure shift. This is a displacement again after retracing, clearing out that sell side, hitting the bullish order block. So you can pretty much see that the order flow here is bullish, bullish. And then once we gapped up, we had this new week opening gapped higher, completely filled the gap, but you're still gonna use it, throughout the whole week, at least for the next 5 days. I'll be referring to this. The whole week I'll be actually referring to this, so I'll be using it as a draw still. Even though we've completely filled the gap, but look at the structure, you're still bullish, priced into this discount imbalance here, swapped sell side liquidity. Now this is a pre-new London session, pre-London session. London session begins at 2 to 5 a.m. and we swept this low, filled an imbalance, and then we pushed higher, breaking above this high. So now this is telling you that it's telling us that the market is still bullish, and that is most likely gonna be or stay as a draw, provided we also have those relatively equal highs up there. So obviously going into New York, I was kind of leaning bullish short term, because we hadn't taken out that high right there. So I just had to study my pre-market range, 7 o'clock to 8:30, and start hunting after 8:30. Obviously, from this low here, which is the low at 3 o'clock, going all the way up to 5, that is your London session. Okay, so we opened up there for pre-market, sorry, actually somewhere up here, pre-market. Now you look down here for 7 o'clock, we opened, rallied, and then we looked and searched for the stop losses at the discount of this range here, and I already knew that was going to happen, so I just looked for the Judas Swing at 8:30. We did not have news today, so the Judas Swing will be obviously to the downside, clearing whatever low has been created before 7 o'clock, okay, or between 7 o'clock and 8:30, or it could be somewhat of relatively equal lows during London, on 1 minute. That's what I'm looking for before I take it. I continue with it going higher. Obviously, that will be my short-term draw, and those relatively equal highs on the left, and this high is a new buy side liquidity that's been generated for the day. So obviously that also gives me confidence in my bias to say, no, I'm gonna lean bullish. This drop here does not change my bias at all. I'm not looking at this as a change in the state of delivery or bearish order flow. No, until this low is swept, or then I can now start looking for these lows to be swept. But if this is still intact, I don't care what's happening here. I'm still going to be bullish, and that's going to remain my short-term high. So obviously we retraced all the way down to this bullish order block here, but more importantly, that was an OTE of this range here. And I don't want to draw this swing high. This is your homework: swing low to that swing high. Find the OTE levels here. That's one confluence. The bullish order block, that's two. Actually, that opening price right there prior this sell side, that's your change in the state of delivery. Look at the bodies on the 15 minutes. You do that, send this to me on Discord. You extend the opening price right there, look at the bodies and study what was happening here on the 1 minute, and that's what I'm going to be showing you. Let's go to the 5 minutes and see what transpired. So this is the 5 minute. On the 5 minutes, you can clearly see those relatively equal lows, and you can also see that we have the change in the state of delivery right here. So I want you to extend this line out and see this candle and those down close candle, they are inside this. Actually, this candle is on top of this, and those two down close candles are situated on top of this. That makes that a propulsion block. Okay, so you extend the propulsion block, study this range one more time, get the OTE levels. You got a propulsion block, and you have some clean lows that were taken out right here, which is obviously, you know, very beautiful. I like that. Sorry, I want to use this. These clean lows here, swept, and then after that, what time of a day? 8:35. That was after 8:30. So we opened here at 8:30, Judas Swing. So people who missed a move low when we opened here for 8:30, they wanted to catch this. They saw that opening at 8:30 and the quick meltdown. They wanted to catch it going low, thinking they're gonna miss out. They went in, and that has enticed them that it's gonna continue going low. You know, meanwhile we know what happens at 8:30. You know, inversion fair value gap, and then we closed above that down close candle right there. That was confirmation enough. Even on 1 minute, actually, I was already in the trade. You know, after violating this imbalance right there, closing above it, retracement, I was already in the trade. So that was also an entry. That BC right there was good entry. Okay, so, and obviously I said this was my, you know, actually best case terminus, but I'm gonna be looking for these relatively equal highs. Now if you pay attention, these highs here, look down here, they were created during the they were created during the pre-market. So 7 o'clock started here, run up, you know, enticing people to chase it going long, and then boom, the stop losses here, trailing stop losses, these relatively equal lows, no resistance, liquidity run, and those relatively equal lows there. You know, those the trailing stops were engaged right there, and then for us to then continue higher without these people who were already long, you know, during London. So the first thing you ask yourself whenever you are going to be trading New York, or whatever session, okay, you want to understand, where is price coming from? Where is price right now, and where could it be headed to? Those are the three most important questions. Okay, so I've already showed you where price could be headed to on higher time frame, and then where in context with that, where is price then at the time that you will be looking to get a trade in? Where is it coming from? So obviously it was coming from these relative generating these highs, and it was a ways. Okay, so if I were to answer those questions for you, obviously using today's trade, where is price coming from? Pre-market, studied the pre-market. Okay, it left relatively equal highs. Where is price right now? At a discount of this range, London, and OTE levels. Where is price going headed to? Obviously I showed you my short-term bias on the 15-minute chart, so I'm bullish short-term, you understand? And then obviously that if all those questions are answered, you then get to obviously tick all the boxes and you start looking for entries. And this is what we had on the 1 minute. Obviously, this is what we had on the 1 minute. Okay, so on the 1 minute, these are the lows that I show you, the relatively equal lows on 5 minutes, and then the relatively equal lows here that were left pre-market, during pre-market from 7 o'clock we opened, generated liquidity to the upside, then we melted lower. OTE cleared these lows. You remember the propulsion block on 15 minutes. Extend those lines out. I want you guys to send me those on Discord. And then look at the opening here at 8:30. Judas Swing low, clearing sell side here. And obviously sell side right there. And then pushing and closing above the close that this consecutive down close candles, the opening price right there. That was just confirmation enough. I went long right there. Obviously also violating the fair value gap, which was respected here before we ran lower. Before we ran the sell side liquidity here and sell side liquidity right there. It was respected. It pushed price. So now we closed above the consequent encroachment of that. So I was using the breaker here for my entry, the inversion fair value gap, and also the BC up here. So I had more than 3 things agreeing to give me my entry. You understand? So and then I had the draw here, short-term draw, the relatively equal highs. Obviously this is good, because also I was getting the buy entry below the 8:30 opening price and also below the midnight open, so that's a discount for me for the day. So I'm now going to show you my annotations, and obviously this is my $1 million model, and there you go. So the smooth waters, invite rocks, and then we have this inversion fair value gap, pushed above the 8:30 open, went long right there, and we targeted that. So, and this here, I said in the group, this could be our measuring gap, so we have to make sure that we get the -1 standard deviation of this and take off some of the positions, some profit. So this was the low, and this is obviously the midpoint of that. So we took 80% off right here. You're going to see on the screenshot, because of we left this gap unfilled. What is a measuring gap? A measuring gap is, let me show you. Let me just give you an explanation. If you're going to have the market run higher, let's say it takes out this low and then pushes higher. If you believe the market is going to go from this low now back to those highs right there. Okay, so before it reaches these highs here, there will be a gap that will be left open at the equilibrium of this range, and that fair value gap is called the measuring gap. So you can always use the Fibonacci standard -1 standard deviation to know exactly, once you see a gap that's going to be left unfilled, especially in the middle of this implied dealing range, because this is not yet confirmed that it's going to go from this low to that. Maybe by the time you see it, the price will be somewhere here, and you think, okay, I don't want to see this fair value gap here get fully filled. So sometimes it will just do an institutional order flow entry tool and then run higher, but in most cases you just see it leave that fair value gap open. You can always measure from the low to the midpoint of the fair value gap, make sure it's in alignment like that, and then you get the -1 standard deviation. That is your best case terminus. Okay, that's where price is most likely going to reach. It could be before or after it sweep these highs, so it's very important for you as a trader to take something off once you reach the -1 standard deviation of that range that has already been delivered. So in our case today, the measuring gap, obviously it was just below the -1 standard deviation of the measuring gap, was below our target here, so we had to take out something before we hit the best case terminus. I hope you guys understand where I'm going with this, or what I'm trying to explain here. So you'll see, because I'm going to show you the -1 standard deviation is up here, so it took 80% off there, then it left the 20% to run all the way up. So I'm going to show you now the screenshot of the execution, and that's where you can see on that screenshot that's where we actually took out something. And beautiful trade, and then we left the 20% to run all the way up to our buy side liquidity right there. Easy trade. And obviously you can see here the midnight open below our entry, and also the 8:30. That's a deep discount for the day. And now I'm going to show you, because I was trading this trade, I took this trade with the bootcamp members live on Discord. Let me show you the engagement, and yeah, let's see. Let me see some W's in the chat. W's in the chat, W's in the chat, W's in the chat. Let's go. W's in the chat. All right, I'll keep you guys. Let's go. I already took some partials off here, and now we're about to hit take profit, right? Let's go. Beautiful trade. $1 million model. Let's go. W's in the chat. W's in the chat. Let's go. Let's go. Take profit hits, motherfuckers. Let's go. See you guys tomorrow. Cheers. Sorry for swearing here. This is my execution. Taking partials at this level, at the negative 1 standard deviation. Okay guys, so that's it from me today. Hope this was insightful. See you guys on the next one. All right, cheers.